Good day, everyone. Alice here from Safi Financial Network. Today is June 10, 2023. As you see here, I'm just with my bike clothes here. I just want to ride my bike. But before riding the bike, let's talk about Chinese ADRs, as I think that they're gonna setting up very, very nicely for a bullish momentum, especially for the next 2-3 months. And let's talk about charts. So here is the EEM, which is Emerging Market ETF. And we were talking about this, I believe, 2-3 months ago. I'm gonna post the video here up there, but in that video, I just mentioned that EEM kind of like a forming the bottoming formation in October, and sure enough, we had this bottoming formation nicely coming down. This is a COVID crash. It goes all the way down to kind of like a COVID crash level, and then bouncing back up. And since January, it's just going sideways. Right now, if you just zoom in here, you're just forming a nice bottoming formation again for another pop. Here is here are the shadows, and here is the bottom. So if as long as we are above this level, which is 20, I believe this is going to be, yeah, this is going to be a $37. As long as we are above a $37, which is going to be at this pivotal point, that could be kind of like a bullish sign, especially this consolidation is forming very, very nicely. Last week we had a pop here, and this one can go all the way up to $42, which is going to be this pivot. And if it close this pivot, because this pivot is very important, goes back to this wide range bar. So here we had the pop coming down, gap down with this wide range bar. So lots of sellers are still there, but we just touched it last time, I believe in January, and then coming down. So this area is getting weaker and weaker as much as we just touch one area. So this is kind of like against the classical view of the market. So lots of technical analysis. Previously, they said when you hit this area, that's going to be a resistance. But the new one is saying when you hit this area a lot, this means this area is getting weaker and weaker. Why? Because everyone knows about this area. First of all, everyone wants to put their stop losses here. Market knows that this area is going to be a resistance. And when everyone knows about one area, that area doesn't work. So basically, that simple is that. And it's totally against the classical view of the technical analysis. Anyway, so right now, EEM weekly chart is forming a very, very nice bottoming formation for 42. I believe we're going to have another just a pause here to just take some profit, because some lots of people just getting profit here. It's going to be a 15% to 20% uptick, and then it can just accelerate higher to 48 to 45. So this is the area that I'm looking for, specifically $48. That's going to be the level that I'm looking for. Here is let me just zoom back here. Here's the ending diagonal, fails to the downside. We just go into the capitulation phase. Couple of times we got back, bounced back up nicely, especially this wide range bar. So look at this wide range bar. This wide range bar fails here. So that's why this area is important. And this wide range bar fails when? In this candle. So that's why I'm saying this is kind of like a back test, because this one goes down. So let me just run you through. So here's the level. So this one's just breaking down, hitting up a goodbye kiss this area, going down to lower low. So right now, we didn't test this before, and right now we are coming back to this level. Possibly we are getting back to here for the end of the rally, at least for this stage of the game. So that's going to take, I believe, 2-3 months to get there. So, but that could be kind of like the booster for some different stocks. Before getting to those two stocks that I want to talk about, let's have a look at daily chart. Daily chart, as I said, here's the resistance area, here's the supply area. So this supply area works very well with this pivot, and right now we just gapped up on Friday, coming down. So probably we'll see more choppiness consolidation, but this can ended up to the rally to 42 level, 42.30 to 43 level, getting back to this supply area. So this supply area acts once, but it doesn't go to take out this pivot. Just go all the way down to here to 61.8 Fibonacci retracement. So if you just take low here, high here, and put your fib here, so you will see 61.8, which is fantastically worked out, technically worked out. And right now we are just forming another choppy to the upside. And this consolidation can end up to this rally to test this pivot. If we get back to this pivot, I should say probably we will see a kind of cup and handle. So that could be pretty interesting to see if it works. If it gets there, probably sideways consolidation for the next pop to 45 to $46 for the daily chart, and then next level is going to be this. So we'll see how it goes. Right now, it's just in overbought condition and needs to have more consolidation for the next pop. Moving on to the next stuff, which is Alibaba. And Alibaba weekly chart, here is the momentum index. So momentum index shows pretty nice bull reversal here. So as you see here, we have a crossover here, bull reversal. And also we are just forming a nice divergence here between these two. This is the pattern that I'm looking. So any close on this trend line, specifically about $100, that could initiate rally for Alibaba to 120. So 120 tested a couple of times before, and every single time when it gets there, just goes down. This time, I should say, could be a different. Why? Because first of all, the pattern is pretty bullish. So this is a downturn, and right now we are just forming a basing pattern for the next uptick to where to 140 to 170. So that's the level that I'm looking for, at least for the first very, very important target place. The next one is going to be here based on the weekly. So the first one is here. The next one is going to be 200 to 240. But before that, we need to close. Let's go stage by stage. We need to get close above this 100 level. Then 120, then we can get to 130 to 150. And that could be very, very quick. To be honest, it can take time, 5 months, 6 months to get there. But when it breaks out to the upside, it can go all the way to 153 in a week. So we'll see how it goes, but I'm pretty bullish in this stock, especially with the pattern that I'm looking at. Here's the daily for BABA. So daily, we are just stuck in this triangle. This is a nice demand area. So we are just getting back kind of like a technically reacted to this level. If you see, we are just forming a bullish consolidation, but this bullish consolidation, it just rejected this trend line. So this is kind of like a technical reaction. But if we get above this, should say above 91, so we can go all the way up to here to this supply area and this supply area, which is $100. As I mentioned in weekly chart, any close above this pivotal point, we can get to 190, which is going to be a continuation to this. You're getting to this gap. So let's say above $100, we can go to 118 to 120. And above that, it can initiate rally all the way up to 135 to 150, which is going to be at this gap. So we will see how it goes. The next one is JD.com. So JD.com, this is a monthly chart. It's very, very important to bring out the monthly chart. We got series of lower high, and we have like this ending diagonal. And this ending diagonal is very, very getting nice pattern to the upside. Why? Because we got into this demand area. So based on the monthly chart, we are pretty ready for, this is an oversold condition again. So we are pretty ready for a pop to the upside. And you see the last month, which is this month of June, we had nice uptick this month. And whenever we had uptick, so we have followed through for the next months as well. So we'll see how it goes. But if we close above a previous high, which is a previous month high, that could be kind of like the bullish scenario for JD.com. At least we can go to $44 and then we can go all the way up to $56 and then $60. So this area is very, very important. I'm not sure if we can get close monthly above 65 here, this area, because there are tons of sellers there. This is a gigantic monthly supply area in this area that I see. But from here to there, it's going to be a more than 80% profit. So why not we don't take this trade? So let's jump into this, because the monthly chart gives us a very, very nice risk to reward, I should say, challenge for us and trade for us. So we can take it. To be honest, I take this with Alibaba. I've got like a decent allocation. Michael Berry in their portfolio, in his portfolio, he just accumulates lots of Chinese ADRs. Charlie Munger added as well. So I believe one of another super investor, I'm not sure about the other one, I need to look at it, but they got into Chinese ADRs because they noticed that it's pretty cheap right now, and they're kind of like a value stocks. They're not going anywhere. Um, uh, so we will see how it goes. Moving on to a weekly chart for the JD.com. So here is the weekly chart. We are getting nice uptick for, actually, this is very, very nice pattern. Sloping up for the MACD. You see that? So we got a lower low, but look at the MACD. MACD is just sloping up, forming the bottoming formation. Here is the RSI. Here is the stochastic. So this one, all these three indicators showing a bottom before, and look at the nice basing formation in this demand area. So we're kind of like forming a bottoming formation for this. It can go all the way up to 50 to 52, at least to test this level. So when we test this, it's gonna just pull back. For sure, it's gonna pull back. It's gonna react to this, because this is kind of like the dominant trend line there. But this can go here, and we are not looking for trend line as a very, very important factor. I'm just looking for a price action. This wide range bar broken down here, and especially this wide range bar broken down here, it's coming along with this trend line. So we got just last 2 weeks, we got uptick here, so we can go all the way up to here. Next level is going to be this supply area, which I believe we're going to have a reaction, getting back to here, to this supply area again, which is coming along to this trend line. So that's why we are seeing kind of like a reaction to this level. And possible scenario, we can just breaking up to the upside for the next target, which is going to be 66. And to be honest, I'm going to take out all my positions here when we get to 66. We'll see how it goes, but right now we are at 36, which is going to be a very, very fair trade. And also for swing traders, which is they're doing based on the weekly chart or monthly chart, or for those traders who just want to do it very, very short term, we are at a very, very nice bottoming formation. And also for investors, I'm kind of like looking at like multi-week swing trade investing in this, and it's kind of like a pretty cheap right now. So we'll see how it goes. Moving on to the daily chart. So daily chart, this is the level that I was looking for. It's nicely going down. Stop hunting this level because of this pivot, but look what happened, rejecting back up. So this ending diagonal just broken to the upside nicely. We are just forming a consolidation on this pivot. So when this consolidation break out to the upside, pull back could be buying opportunity for the next one here and here. So we'll see how it goes. I believe it can go all the way to $46, $47 in the next 2-3 weeks. So just keep an eye on this. I believe Chinese ADRs, EM, emerging market, they are just setting up for the nice rally, while S&P 500 and NASDAQ in US market, they could be a lagger. I believe Chinese ADRs, money is coming back to the Chinese ADRs, and they can outperform the US market in next 2-3 months when they're just lagging and doing sideways. Okay, I believe I covered everything. If you like this video, please smash the like button, subscribe to our channel, and make sure watch the other 2 videos that I created yesterday. It was for Dow Jones in the transport index. Very, very important video. And that's why we just explained why US 30, which is Dow Jones, can outperform the other indexes, NASDAQ and S&P, because Dow Jones Transport Index showing a bottoming formation and ready for pop. Make sure that watch that video as well. So have a wonderful weekend. See you on the chart. Bye-bye.